Investors and traders, welcome to the channel Market Chart Pattern. In this video segment, we are going to take a look at the key US technology stocks that we follow. This video is for educational purposes only and it is not a financial advice. So guys, what we are looking at is the daily chart of Nvidia, and today is the 25th of May 2023. Today the earnings came out for Nvidia, and look what a big gap that we have seen. So it has had a nice rally going on, since October 13th. There we go. That's when the broader markets also bottomed, but it has had a one hell of a impressive rally. Look, it's just amazing. And what it has done is actually it has made all-time highs as well, and it has taken out the highs of the 22nd of November 2021. So that's all great. So what is really powering this rally? It's the usage of the Nvidia chips, the GPUs, for AI-powered devices and technology. So AI really powers this rally, so it's just really incredible. And we'll just briefly also take a look at the NQs. So the Qs is actually, because of Nvidia, it had a pretty good weighting in the index, and what we can see is that actually it made a new high as well. However, you know that if you have been watching our channel, the segment which we do on a weekly basis, we look at the key US stock indices, and for that we have a key resistance coming in around 14,350, and the higher reach today was as high as 14,031 and a quarter. It's possible that actually the momentum might actually take the stock index higher, and we could enter this wall of resistance coming in around 14,350. And if we just have a quick look on the ES as well, you can see that the performance of ES is very different compared to the NQ, which actually made a higher high. Okay, so let's go back to some of the other stocks. Let's start with Tesla. There we go. So this Tesla stock we have been following for a while, and if you remember, the viewers who are our subscribers and those who follow the channel will know that we were watching this pattern formation, which is highlighted in yellow. We had a nice one-to-one ABCD pattern forming here, and so far this low has held, and based on that, the next pattern that we are following is in fact, if the stock is able to close above $210 per share level, the stock we are looking at about $270 per share. That is going to be that ABCD one-to-one price projection higher. Now the key for this one is that this $155 per share level actually holds. That's the key for this pattern. Otherwise, the pattern would have failed, and we will be then looking at a different kind of a market structure, and we will have different kind of price projections as well. One of the things that I would like to point out is that although the price has been rallying after hitting that $155 per share level, but in fact what we also see is there is a little bit of small ABCD pattern formation that took place, and the price has declined a little bit. And also we have this down trend channel resistance coming up here as well in this region. So we need to be following this level pretty closely. But from a momentum perspective, what we also see is the price is above the 20-day moving average. So from a shorter term trading perspective, the momentum remains positive to the upside. Okay, so let's take a look at Apple. So the Apple stock has met our daily range target of $171 to $175. That range target was met a while ago. And what we have seen is actually the Apple stock also trying to take out the highs of 17th of August 2022, but it has not been able to successfully take the highs out and found resistance at this level. And what we have seen is a pullback right into this 20-day period moving average. So for now, we are just watching the um, price action. We are watching around these levels how the price is actually behaving. Um, we did have this price symmetry going on. You can see these lines here. The rallies were of this much magnitude. This rally has gone a little bit above these levels. So in a way, we can say that the bearish symmetry is actually has changed its formation, and maybe the stock might have broken out of it, but we still have to see convincing closes above these highs on a consistent basis. And here, from a momentum perspective, the price is just hugging the 20-day moving average. And if the price begins to close below that, then from a momentum perspective, maybe the price has started a pullback. And if you look at, the stock has been going up for quite a while actually now, and a decent kind of a pullback after reaching the targets could be in fact anticipated and might actually be healthy. Let's take a look at Microsoft. So here we go. So the Microsoft stock had a really nice rally today. It's right at the upper boundary of this rising channel, and also the $320 per share level target that we had has been met. And the key thing to note is that the price today closed just above $320 per share level. And what it means is it has closed above the 78.6% Fibonacci retracement. We need to watch the next couple of trading sessions to see that whether this price move is actually sustained or not. But this $320 per share level, which we had a target for a while, has also been met. If you look at this really nice channel, and you look at this 20 period moving average, it's all rising above. It's from a momentum perspective. The stock is actually doing pretty good, and you know um, the momentum remains strong to the upside. Okay, let's take a look at I'll see next stock. Let's take a look at Netflix. So Netflix has actually tested its above boundary of the trading range, and it's pulled back a little bit. We'll have to wait and see whether this in fact is a sustained breakout. Initially what we were looking at was possibilities of an ABCD uh, down right here into $270 per share level. That scenario did not materialize because the price found support from $320 per share level, which is the 61.8% Fibonacci retracement. And in fact, what the price has done now is forming a bit of an ABCD pattern formation. Uh, let's just do that right here. So what it means is that it might be actually a possibility of a double top remains if we look at the possible resistance coming from a structure of 3rd of February 2023. So this is what we are watching in the Netflix. Let's take a look at Meta. So Meta has also been another stock which has really had a very nice rally from the 4th of November, but it also had a similarly spectacular decline as well, where the price declined from all-time highs of about $380 per share level right down to the roughly about $87-90 per share level, which was the 78.6% Fibonacci retracement from the time when the IPO took place to the all-time highs reached. So a massive decline. And the good thing is that the stock has recovered a fair amount. It's moved into this gap formation here. We were really closely watching this $200 per share level because this was the 38.2% Fibonacci retracement coming off the all-time highs. The lows received met at the 78.6% Fibonacci retracement. We did have a bit of a pullback, but then price actually broke above that level. So now that is very good and positive for the stock. So what it means is that we have to now watch for pullbacks because the stock has gone up and rallied for quite some time, and pullbacks, in my opinion, will be healthy. Let's take a look at Roblox. So this Roblox stock, what we think is we might be moving in an ABCD formation, which could take the stock up to about $60 per share level, roughly speaking. However, there are a number of resistances that the stock needs to overcome. We have the resistance coming from structure around here. So price rally took quite a while to reach that level and then rapidly came down. Now, the interesting thing is that it did an ABCD one-to-one formation right at this key support level. So and so far this level has been held. Now the price is above 20-day period moving average. It seems to be kind of going sideways, perhaps consolidating in this region, as long as this level of $33.70, roughly 60 cents, is not broken to the downside. um, we believe we are still in this ABCD formation higher, which could actually see the stock go up to roughly $57 to $60 per share level. Let's take a look at Amazon. So here we go. So here the Amazon stock actually, if you recall, the old time subscribers will know, it gave us a little bit of a problem because we were initially looking for some support to come in around this region of 103 to 102 level, but the stock actually broke these levels, and what it did is, in fact, it went and found support from the 78.6% Fibonacci retracement of the lows of this $80 per share to the highs reached around here around 111. And what we believe is that the price actually is moving in this ABCD formation highlighted in these green dotted lines around, and the level of around $120 per share level is achievable. However, it's also possible that we might have already reached the highs because the price came as high as $118.60, which is fairly close to this $120 per share level that we have been looking for quite some time. From a momentum perspective, the stock remains positive because the price is above the 20-day moving average, and it has been just consolidating over the last few days. It's still possible that the price is actually going to go and make this $120 per share level. But if the price begins to pull more, break these lows out, the chances are we might have actually seen a high for now in this stock. So guys, this is what we are watching in these key US stock excuse me, stock tech stocks. So if you like our analysis, please do subscribe to the channel. And thank you very much for watching the video. Good luck and good trading.